guys, I hope you had a good weekend with that G20 event. Obviously, we're going to talk about that. What are the implications on the swing scenarios, either on forex and indices worldwide? So we're going to do this, but first of all, we take care of our nasty cryptocurrencies. And we kind of failed to install a bullish reactivation out there. The weekly candle close is kind of really the most uninteresting we could have, both in a monthly chart. So let's just hide. So monthly closing at the lows. We'll see if we're heading for a rangy kind of month. So basically the same thing as I was expecting back then in the weekly chart. So either we're going to make a morning star candlestick pattern in here and going to try and make a lower shadow candle, probably going to have to break those lows. So take down some stop losses, but not managing to find a bearish momentum to follow through. So probably just triggering stop losses below that low and making the bullish engulfing pattern early 2019. That's option number one. Option number two is basically we make same thing as I said back then on the weekly chart, Harami pattern, and we can expect a December close to be done above 5,700, for example. So I would say these are the major two choices we have. I think we're working that support area either way. It's just it's hard to forecast right now. What is it? How is it going to be done? I think it's liquidity driven. So if retail traders are buying, we're going to go lower. If retail traders are selling with leverage, then we're going to go higher. And I absolutely have no idea of what choice is going to be done. And I stand on what I said previously. No matter how we do this, buying right now is what you should do, how you should be. If you haven't bought already at that stage, I say it's too dangerous to remain out of this market because we could very well have a very brutal bullish burst, everybody FOMO trading and everything like that. And if you miss that shot, then you might have to run after bullish prices and trying to buy in a market that has no sellers, and that will be kind of tough to make and not really compatible with the way I try to teach you guys how to trade, to always have one step ahead, to just get the hell out of reactional trading and avoiding trying to follow prices when they move, but more likely having a step ahead and applying a strategy to this market. Only thing is that as you do this, you're making what we call speculation, and speculation comes up with a risk management. So you're trying to speculate on what the next move will be and not what the current move is, which is, once again, can be done, but far less risk taking and obviously far less gains to expect as well. Facing this. So yes, cryptocurrencies, monthly chart is going to be tricky, so be expecting that this bottom can just take either just a few days to reactivate, and I think a few days from now we'll be breaking resistances and be heading to the 5,000 and eventually breaking them up. Probably first week of that month, and we're going to digest the rest of this month in there. Option number two, yes, we failed to find it. We'll work this area for a couple of weeks, and then we're probably going to have to expect probably mid-December for that bearish breakdown, and of course the weekly chart is going to be the game changer. So previous week didn't follow through regarding what I was expecting, meaning that instead of either breaking the previous candle's low with a lower shadow candle or retracing into previous week's candle, we've been doing exactly none of those two choices. We just done nothing, dying in a stupid range that makes no sense. So we're installing prices in here as we shouldn't. As I said, normally we should set some kind of a sharp V bottom reversal structure, not dying in here and trying to install ranges. So it doesn't fit the plan at the current stage of that plan. So I would say either we got a strong reactivation pretty soon early that week, or we're probably going to keep on dying in here, but it suggests to me the balance will shift to the downside odds. The more we spend time in here, the more it will be the sign to me that the smart money is still couldn't find enough sellers, and in that perspective they're probably going to have to push prices lower. I remind you that I think smart money is buying, but in order to buy with big volume you need to have lots of tiny sellers in front of you guys. And the thing is that those short tiny seller, those tiny short position guys who are selling their bitcoins, we probably don't have them enough So the question is, do we need to go lower to trigger another set of stop losses for the smart money to buy them out or not? And I really have no question. It will depend on what the retail traders will do. If they're all buying in here, then obviously we're going to go lower. Sorry about that. So pretty hard to say, pretty hard to tell anything. All we can tell is that in a daily chart perspective, it's just we're trading interesting buying entry prices. But from what I can see, we're also trading at a dangerous bearish trade line in here. Following through the latest breakdown we've made, we try to compress in here where I made my first buy and hold entry. Apparently the market decided to get out of that squeezing area by the downside instead of the upside that it was forecasting. So yes, I've been proven wrong. We've installed that bearish breakdown and we now have a bear trend in here, suggesting that this bear trend must be invalidated whenever we decide to return up here, which is the target. If we want to invalidate this break up, we're going to have to retrace up here, suggesting V-shaped structure, what I was forecasting back then. But as long as we don't find the bullish reversal of that bearish trend, we need to be cautious, because in bearish trends, generally the trend lines tend to reverse the prices. So in terms of momentum, we have strong weaknesses in here. We could have reactivation of the bearish momentum. That's what it says. So if we cannot manage to break this up, then I think we may have another push. The other push that could lead us below 3K, and I need to set this once again and say it out loud. If you bought already on a buy and hold, selling again to buy at lower prices shouldn't be an option. If you made the buy and hold, get the fuck out of here and wait. This is all you have to do. You're not here to manage the risk on a buy and hold. If you're doing this, it's only because, like me, you've been sparing tiny amounts of your cash flow for further buying entries, but you're not selling what you already bought. It's simple as that. If you decided to make step-by-step buying entry like I decided to do, and still have available money to do this, then maybe the final entry could be made at prices below 2,900. If you bought it all in already, just get the hell out of here. Don't watch your charts. Don't try to sell part of your gains to buy at lower prices and making money management out there. Who gives a shit? This trade is gonna last for 2 years, so let it go. Move to something else. Learn to trade forex market or stock market, but please don't waste your time trying to figure out what the bottom will be on the bitcoins and other cryptocurrencies. Interesting prices are there. You wanted to buy, you should be buying already. Only you can still try to spare a tiny amount of money to buy at lower prices, trying to catch the bottom. But please, please, the biggest mistake you could make out there is to put more money than you expected to put at the beginning. So you're already all in, please move the hell out. Now, talking about other asset classes, we're going to make a swing review today, so let's do it. First of all, we're going to switch to only high importance things to see what the economic calendars gives us for the week ahead. So we're obviously going to have the ADP and FP this week. So the employment numbers are going to show up later that week. So it's probably going to be the only major catalyst we have. But we're also going to note this. AUD is going to publish GDP, and I expect the market to be eventually, the consensus to be eventually beaten. I would like to see same number as the previous quarter, so 3.4% would be great if we could have it. It's a year on year, and the quarter on quarter, I expect this one to be slightly beating the consensus. So not making the 0.6, but probably 0.7 or 0.8 could be finally a good news for AUD. And I would hope for this to come, and if it comes, then we will have probably bullish outburst out of AUDNZD, the one we finally been looking for. Could be at play, and we've got early signs of it. We're going to talk about that. All right, so let's get right to it. So AUDNZD, I said later last week, okay, those prices are the one I wanted to buy, but the thing that we're closing at the lows of the week in here, closing as the lows of the day as well, I don't want to buy in those conditions, even though I was really thinking that we're going to do this, meaning gapping up on Monday. So we're doing this, we're working up the trade line, and I think we're about to fuck it up. So I think we've already done that. The scalping has been broken up already, and now I think we got the bullish momentum, and I think we've got more than enough to try reaching out. This next Fibonacci retracement level is going to be 1.07, and I think this is where we're going to head next. So first stop in here, probably expect some retracement out there, but anyway, at that stage I'm not selling a bit of my AUDNZD, only buying right now, and I think today I'm going to try slightly buying that Fibonacci level 1.06 and a half. 1.065. I'm going to buy this today with a stop loss below that low. So speculative reinforcement right now. I'm getting back in here. So just going to use this usual thing in here. So no, obviously no selling on this one. Just buying. But I'm getting back 4 and 5 on that asset, meaning I'm getting back to leverage positions and here. And waiting for further validations, but I expect the market to rise. So I'm going to be having a tight and tiny money management out there, but probably just 10% profit taking at best, and probably just nothing. Depends on the intraday signals I have in here. If I have just nothing to trade, I'll just let it go to the next level, in which I think here a 20% profit taking just to secure and lock on the gains to pay for further reinforcements is going to be due. But that's all I'm going to be doing for AUDNZD. So yes, I'm back at leverage trading in here. Same thing goes for USD CNH and USD MXN. Those two are quite validating what I was expecting. So we're failing in here. We're about to fuck it up with the dollars. That's what I thought. So obviously the weakers are going to move stronger, faster, facing the dollar. So obviously, this one will lock on the trends first. Then we're going to get euro dollar, GBP USD, GBP dollar. Major currencies are going to fail as well. Or dollar is going to fail facing those currencies as well. But obviously, we're starting with the riskiest one. So CNH and MXN are giving strong bearish signals earlier today, and I think this is just the beginning. So we're range trading in here, failing once again. This is deep retracement, so I expect now it's about time to fuck up the context channel on those ones in a daily perspective. So nice gains to come in here, and I think trending is about to come. Same thing for USD CNH. I'm reinforcing slowly but steadily the euro dollar. Because I think this one is going to remain bullish, but slowly and steadily. I'm just switching back to 3 on 5 in here, no more than that, and get the fuck out of here. You're supposed to be there. So I'm getting back 3 on 5. I think it's a little bit too early to go. I would say 4 on 5. I've been taking leverage reinforcements earlier today, but tiny leverage. So let's say it's a 3.5 of 5 to be precise. Okay, so it's really more like that. It's not yet 4. It's a little bit too aggressive. So I'm not fully leveraged right now. I'm above 1 in terms of leverage, so I've got strong confidence, but I'm waiting for the breakup to occur. So I will go 4 on 5 with confidence whenever we'll make a candle close in here above 1.45. Okay. I'm a little bit more concerned about the GBP because the price structure we have in the monthly chart in here suggests we're going to break the lows, and we've already done that. So yes, I've made a review earlier today for the French guys saying, okay, I think a high probability for GBP to fuck up the bulls and try to go breaking down the supports. So the dollar is not going to be strongly bearish yet. I think it's about to be sideways action earlier this week, heading into NFP, but I think anyway this NFP is going to show us some weak dollar. Don't know why, but I see it this way. So we'll see how it goes. Obviously, if we got strong unemployment numbers to come later this week, then the dollar might fuck up again. This timing for bears, and I hope it's not going to be the case. I hope it's going to be the bearish catalyst to break us through supports. So I'm heading through this. I think weaker dollar, but not trading this for GBP. I think I'm trading this for euro dollar, but I'm still not rising the stop losses. I allow the market to try breaking through support, so it's not the time to go fully confident in the euro dollar until we break that resistance. But I expect that we'll do it with the NFP. I expect we're going to try to get ourselves up here for the NFP, breaking through this and breaking finally that bearish trend channel. we're ranging. So even if this looks like a strong trend, it isn't. Because if it was, we would have had a breakdown in here, which we didn't, which means in here we've been ranging and we're still do. So I think so far this is just retracement, and anyhow and at any time, sometime we're going to find bullish momentum, and whenever we'll find that bullish momentum, I think this one is going to be followed through, because if you follow the long-term trend, this is where you want to buy. Okay, look at this. We obviously want to buy in here. We're trading at a Fibonacci support, 61% retracement. Perfectly what I need to fuck up the bearish trend channel and try to get to the context channel to trend up. Okay, so what I forecast us to do in terms of euro dollar is to get there, reach out to the bearish trend channel, retracing a bit and fucking it up by a nice big trade. Sorry about that. Okay, so to me it's kind of this. Okay, I think everybody thinks the dollar is going to be the safe haven. If we have dangers of recession, I don't nearly think it's going to be the case. But I'm still facing the uncertainty of the market to eventually try to retrace down to 76.4%. And if we're about to do this, then you need to manage the risks. If we are about to go there, if you're going leverage in here, you're going to take a huge stop loss if we go there. So I think there are still huge probabilities for us to try going there, as we still haven't touched the 61 actually. So we could just have an attempt to fuck up the bulls going in here, trying to trade that trend line approximately. You can see, could just try doing this. GBP having some weaknesses, euro area as well falling, so we could have just a false flag going in here and just buying aggressively afterwards. So if you are buying euro dollar, you need to be ready and have a stop loss below those levels, because if we're going there, it could just be a trap for bears. Whoever the fuck will be ready to sell in here, just touching the fib level and then strongly retracing. So yes, going fully in right now seems not an option to me. Okay. Other pairs facing the dollar, so gold, USO, they're all performing pretty well earlier this week. We've already broken previous week's high on gold. Just a few hours of trading, already above previous week's high, so we can expect some bullishness. So everything suggests the dollar is going to weakening this week, but the problem is this NFP could be a game changer, and the market will have to manage the risk all the way through this catalyst. So it's going to be kind of uncertainty at very high valuations on Wall Street. We're going to talk right after. So I think earlier this week the easiest trade to make are to go safe havens. So I think some arbitrage to be playing through. USD GPY are going to be heading toward this. Probably gold, silver, and euro as well are going to be interesting earlier this week, because traders will manage their risk through there. But I don't think we're nearly going to have some strong trends on Monday or Tuesday, but probably just going to wait for Thursday to have at least the ADP number is going to give us a clue about what the NFP could look like. We also have to talk about yen index, of course. So today yen index is going to try breaking at lower valuations because of the G20. So let's talk about this. Is it really going to be a game changer? I think not at all. What we may expect in terms of this G20 is just that we've got promises that the trade war is going to hold for 90 days, but nothing has changed. It means we're not pulling back out of the trade war. We're just holding things the way they are. So first, holding doesn't mean anything like a relief, okay? And secondly, Trump making promises to shut its fucking mouth really seems like a gambling thing in here. I don't nearly think Trump will be able to shut the fucking mouth he has in front of his face. So all to say is that Trump is probably going to miss on that promises. So if at any point Trump is opening its mouth again and breaking ground rules he's been setting with President Xi, the thing is that if this happens, Wall Street will be very much unhappy, because we've got promises, Wall Street's buying them. If it fails, then Wall Street is going to have to price it in back again. But this time we may expect some retaliation from the Chinese. They've been way too much patient already. So I think at some point they're going to try playing nasty games like selling T-bonds or things like that if President Trump is failing on his promises. So don't take that for granted. I think it's purely a non-event that's been helping the equities to price in positive news. We were waiting for something at least positive or something not negative to hold on those support, and this was the perfect gambling thing. So yes, G20 is as expected. So what? The equities are back at resistances. Are we going to break them up? I strongly think they won't. I think we're going to try breaking through them, but I think it's going to be a nice selling opportunity more than anything else. So let's switch to the SPX and highlight this in a charting perspective. So what I expect right now, Wall Street's trading those prices. Look at the futures market. We're trading 2,800. So and we've been retracing a bit. So we're trading 2,800 at the current time. And here, the thing is that how is it going to be? Okay, it's probably going to be bought. We've got support prices in here, so early trading could probably be positive. But we've got strong resistance in here. I think we're going to try breaking through this, but I think it's going to be a failed attempt. So I just said it all right? I think we are ranging. I think the gap has been taking all it had to take. So I think we got no further gains to make than just trying to catch the dust. And I'm not going to do this. I'm not going to catch the dust. I'm just going to let it to whoever the fuck is going to be stupid enough to buy below resistances. So I'm just going to patiently wait for a selling signal. It's probably not going to happen in daily, so I think we need to be slightly more aggressive in here. So 2-hour chart time frame is going to open there. I think we're going to just digest for a few days. For probably just Monday and Tuesday might be digesting. So I expect a very uninteresting trading session today. At least that's what I'd like to see. Both bulls and bears fighting in a tiny intraday range. And probably Tuesday trying to make an excessive breakup, trying to make a breakup. And if I see that breakup failing, so let me just traduce and translate what I say here into trading actual language using my strategy. What I want to see in here is the market. We've already made the trend breakout, okay? So remember, when you apply the strategy, only one fucking trend breakout. So this is what we have in here. We've been breaking up, setting the trend. All right, so this is the trend trade. So what you should see in here is probably profit-taking structures on momentum or things like that, pulling back. What we're waiting for is for this. Remember how you do trade trends. Just open the boxes. I've been making a 1.5-hour long video for you guys explaining you everything about my strategy that you need to know if you want to trade my indicators. What you do when you trade trends is that you try to catch up a pullback with the trend trail. So not the trend trail, the trend channel. So trend channel is going to accelerate. Okay, it's parabolic. I have parabolic formula in here, so it's going to accelerate. Okay, probably going to catch up with it at that stage. So probably today or later today, we might expect to catch up with that trend channel. I think this pullback has to be bought for those who want to buy it. It's going to be an intraday buying signal, no more than that. It's not going to be a strong buying entry. It's just going to be trying to catch up something that may be interesting to buy in here, but that's all it's going to be. Okay, getting in here, trying to buy the trend channels pullback, tiny position sizing is going to be catching the dust after the big movement. And then I'm going to try searching for selling excess. So what I want to see in here is the market ranging. Okay, ranging, sideways action, catching up on the, waiting for the trend channel to catch up with us. So sideways action until we get the bullish signal to go in here. And I think what we may expect in here is, I'm giving you things in advance, guys. So if it plays that way, you should know what to do. Okay, we're trending, so I expect us to grind our way in through the context channel and to break through this. Probably making higher high than that is to be expected. And then what we want to have is fake breakup. So what I'd like to have is in here at that moment, I'd like to see another bullish breakup attempt. But this time we're probably gonna have a sine wave target in here that I want to sell. So I'm waiting for this range buildup, trying to break, and I'm selling the breakout target. Obviously, if there is any momentum signals to happen in here, but this is how I'll play this game. Okay, So simply applying the strategy here. Instead of blind trading or reactional trading, build yourself a plan, applying the strategy rules. And if the market plays it this way, you do trigger the trades. If the market plays it differently, you wait to gather further information that allows you to trigger one side of the strategy, either range trading, trend trading, or anything like that, and you just apply the fucking rules. All right? So this is how I'm gonna play this week. Starting from now, I think pretty uninteresting Monday is down the road. Just waiting for the market to catch up with this. So just remind you that all you have to do right now, at least all I'll think is to do right now, is just to put a damn alert. So what the hell is this X? Okay. So oh yeah, it's extended training hours. Sorry about that. Yeah, I get that. Okay, so yes, I think taking this, and it will be framework, no, goddammit, crossing, framework, trend support. So yes, anytime you've got crossing trend support, you say SPX, 15 minutes, searching for pullback by entry. Simple as that. Sorry about that, just touched the microphone. So this is how it's going to be. To me, it's pure and simple. Got nothing to trade on SPX until we manage to retrace back to the trend channel in 15-minute time frame for a final buyout. Obviously, it's going to be a 1-to-1 ratio, so buying in here is going to be a stop loss there and a target approximately the same side. 1-to-1 ratio, not the kind of trades you want to put leverage onto. Just trying to catch tiny speculative gain to pay for your next stop losses, which means buying in here is going to pay for my selling stop loss. That's all I'm going to do. Catching up the dust to have free stop loss to sell afterwards. All right. Let me have a look at if there is anything else I want to trade. Yes, obviously US oil. We're going to catch on this one daily chart time frame. Breaking up, bullish engulfing structure to expect today out of a taking profit structure. So don't expect more than retracement. Remember you that the taking profit structure doesn't allow breaking resistance on the early trades. The best you can expect in here is to build a range or at least retrace the resistances. Next resistance is in here, 55.24, 25. Let's say the next Fibonacci retracement. I think we're going to go there in a few days from now. Can take from 6 to 8 days. We're 3 days into bullishness. So don't be too aggressive. Can still requires a few days to go up here, but anytime we go there, I'm going to lock on the gains, secure the position sizing, but don't take me wrong in here. The buying entry I made is going to last for a month. I'm going to remain buying in here in month. It's just I'm going to handle my risk, pay for my stop losses, and reinforce slowly but steadily heading on the way up. So right now I'm taking speculative entries. That's all I forecast. But I think anytime we're going to catch up with that bearish trail line, that bearish scalp, it's probably where I'm going to lock on my gains. Okay, so anytime the WTI is going to go there, US oil, I'm going to lock on my gains, partial profit taking, probably 50%, paying for stop losses, and I'm going to buy every fucking pullback we have here, even if we have to go slightly lower. Profit taking structure allow the opportunity for us to go divergence, but the thing is that we've already made that divergence. So this is the reason why I'm buying the profit taking structure in here. Okay? But I still forecast us to probably try break lower. It's going to try to diverge to make divergences again. But I think for now, catching up to the trade line is what we should expect. So kind of a retracing bullish momentum for the next few days, catching up on that trade line, and we'll see how it goes. Either the bulls take it over and we install bullish trend right away from a V-sharp reversal after that stupid kind of trading, or we have to push for divergence, and in that case, stop losses must be paid below 45, and obviously I'll be ready to reinforce my position on those low volume areas. So 46.75, for example, is where I want to lock on to new buying entries eventually if we confirm us breaking down below 50. But that's still to come. We'll have plenty of shows to talk about that in between. So catching up on the yen, I think yen is the scenario right now. I think G20 is going to try break lower, but we're going to probably get to 87 pretty soon, and anytime we go there is a buy signal to me. Same thing goes here. We're ranging because if we were trending, we would have followed through that breakdown. We were breaking down right into the trend context, in the context channel. So we should have broken it down if we were bearish trending. We're not, which means we're ranging, which means whoever the fuck is selling support is just going to be nastily wrong-footed, and I don't want to be among those who will be in those traps. So I think buying in here was the smartest choice. I thought buying in here was as well, but probably still under risk right now as the market may just try to find better prices to buy right in here. Trying to fuck up those supports basically I think is about to happen. Just trying to trigger stop losses to whoever the fuck is stupid enough to release the yen calls, and I'm not going to be among those guys. So I just think it's a wrong foot in timing just to search for a final. Basically I should have known about that. Normally in trend, remember what I told you, if you do Elliott trading, never ever try to anticipate corrective timing, because yes, this is really strong movement. It looks like a trend, absolutely isn't. This is pure ranging activity. And if you do this, generally what you need to assess is when it goes down to ranging, the only rule you should trade is that. To me, the best ever rule in applying Elliott wave strategies to when you trend, you're going to have odd numbers of bullish impulses. When you correct, you're going to have even numbers of corrective waves. 1, 2, 3. I should have known that we'll have a fourth one. So we're making that fourth one probably today or in a few days from now. So this week is going to be yen scenario to me. So I'm looking at reinforcing all my yen pairs: USD GPY, EURJPY, NZDY, CAD GPY. All those scenarios I'm going to trigger reinforcements. Probably not today, but I'm starting to look for this. So intraday bearish signal on all those four assets is going to be a buying entry to me, or selling entries actually, because they're all versus yen. Okay, so I'm buying yen all week long on any intraday signal I'll have on those four. Okay, so yeah, I'm going to mark them up. Obviously, this is what I'm going to be trading this week. Okay, so this week ahead, this tiny reinforcement euro dollar, but they're already done to me. Gold is to be watched closely. Silver is going to be as well. US oil is going to be interesting this week, obviously. We're going to have a rollover on futures contracts for my bunds. So anytime I've got the new contract available, I am fucking going to take it. So I'm selling bunds, so buying 10-year yields on the euro area because we're going to have QE ending on that expiration, and I think we're going to have some strong move, but you already know about that scenario. I'm not going to say it once again. What I care about is VXN as well. We're going to have interesting trading strategies to put in place in here. I think VXN is to be bought, not yet, but I think pretty soon. Obviously, I think today we're going to try trading lower than that. Okay, I think that's the plan. So you may expect some corrective waves overlapping in here at the best, and probably not more than that. So as you can see, we've been trading in there. So we got no volume on VXN, okay? It's a derivative contract. So I think first support is in here, second support overlapping in here is where you want to buy and sell US equities in the same time, okay? So buying VXN and selling NASDAQ and SPX is going to be the plan to me, and you might have already guessed it. Oh, sorry about that. I'm going to sell Tesla, I'm going to sell Apple, I'm going to take profit on NVIDIA, and I'm going to buy General Electrics on that same timing, okay? So one swing to happen during the week, I think, in Wall Street, probably a bearish swing, and we'll see how low this can get us. I don't think we're going to go crazy bear market trading in the SPX next week, but just expecting profit taking in here to sell to get back again in the lower boundaries of that range. Sideways action in here is what I forecast. I don't see us heading to new highs. It's not going to happen. Probably next year, and only if we have strong results, strong earnings from company early 2019. But I think only the earnings season can get us to a new high, and we're not going to anticipate more than that in between. So we're going to probably die out here for the end of that year, waiting for the earnings release on some sideways action in here. Basically, let me just sum up those information in a single thing, all right? We're range trading. So what that means is that in here is where you've got the freaking fucking dumb trading area in that range. And I think this is where we're going to die until we get those earnings release. Dying in here, probably dying on the upper part because we're going to have bullish expectations once again. Wall Street's bullish forever, but I don't think that we're going to be as bullish as we were before. So we're going to be cautiously bullish. So I think remaining in there or in that area would say, okay, let's say this is where the dumb area is, and this is where I think we're going to trade. Okay, slightly above, but probably this is where we're going to expect swinging in the next few days and weeks, probably terminating the year in there. All right, so I'm going to play selling at the highs, buying at the lows, selling at the highs, rebuying. I'm not buying. Okay, I'm not buying anything at Wall Street. I'm just going to sell, buy myself out, sell, buy myself out, sell, buy myself out. And if the earnings release are good, then eventually new historical highs that I will sell again. But I'll just let it go in between. That's it. Okay, and if the earnings release are disappointing, then we'll go lower than that, fuck up that support and get to the furthest, to further below areas that we've been highlighting already, and probably getting ourselves below 2400. Is going to be the scenario. Okay, I still forecast that this is the highest probability, but we're going to wait for early signs of Q4 results. So probably early January or February to eventually figure out if we're going to make historical highs or there. It's a binary choice, and I don't know. It's going to be a binary condition depending on the earnings release. And I'm no magician. I don't know what those numbers will be. All right. AUDNZD, we've been talking about this one already. Yes, we did. We've been talking about stocks and yeah, junk bonds. So this is what's been switching the market as well. Put an alert in here. This is the median area of our junk bond thing. I think anytime we go there, it's going to be a selling again. So this is going to give us the timing to sell at Wall Street. So just put an alert on this one. It's going to help you giving a timing. It's not something you trade. Don't trade the junk bonds. But if you think this is not, okay, use the indicators. When you don't know, just simply use the strategy. Okay, what we've done in here, we've been breaking through the context channel with a bear trend, which means we're trending in here. So, do you think this is a bottom to buy? Obviously not. We're breaking support when we're trending, so we're going to go lower than that. Don't buy those levels. I think this is the area you want to buy the junk bonds again. Okay? So this is the area in which I think buying is going to be an option. So don't buy the junk bonds right now. Don't think that we're over in terms of volatility and risks. It's not because we had a short-term relief on G20, relief, that this is already over. We're far from being over from problems on the equity market. All right? So don't be fooled. If you think this is a bullish catalyst that's going to push us to new historical highs, then we're far from this. And I stand on that. All right? But don't be too bearish either. It's kind of my thinking here. All right? So that's basically it. And I'm going to leave you guys on that. So I wish you a good trading week ahead. Trade cautiously. We might expect sideways action in terms of index trading. Forex is going to be interesting, but probably just not today, but more tomorrow or the day after. But heading into Thursday, we should have some kind of a sensitivity. We could sense the trend at some point and see how the market is positioning itself ahead of the NFP if we do have bearish dollar. Don't be surprised. That's what I expect, but I'd like to have further proof of it before getting into more leverage position sizing.